So from the onset, what I told you about the market trading either in a bullish or bearish market, and we had bullish and bearish candle, where we said the bullish candle represents the market buying, and then the bearish candle represents the market when it is selling. Okay, now these swing highs and swing lows also plays on the market in a sense that when we have a market which is selling, the swing highs and the lows are able to tell us which type of market we are in. Okay, so for instance, you remember the first lesson we had where we talked about the fact that when we have the market trading in a diagonal, I think someone used that right word. Okay, the market doesn't trade in a straight line, either vertical or horizontal. We have when market is either in a bullish trend or a bearish trend or consolidation or accumulation phase. Okay, now you can't just look on the market and just say, okay, we are in a bullish. So for instance, if I hide this and I leave this chart, just this particular area, okay, I leave just this particular area for you to see, are we in a bullish or a bearish market? You can't easily tell. But there are some telltale signs that can show you for you to know that, okay, we are actually in a bullish market or we are actually in a bearish market. And this is from, or we can glean this from the highs and the lows that are formed on the market. So from the swing points, that's the swing highs and the swing lows, it can give us a clue of what to know, whether we are in a bullish market or a bearish market. Okay, so we have two market structures, which is the bearish market structure and then the bullish market structure. Okay, and then the other form is the accumulation, which we don't consider most, which is there, but I'm not saying we don't consider, which is there. Okay, now let's look at bullish market. When we are in a bullish market, for instance, I can place a trade somewhere here. I can place a trade somewhere here. Okay, assuming I place my trade in here. This is where I place my trade. And a trade to buy. Okay, so I enter a bullish market and I know that we've entered a bullish market. For instance, okay, assuming I place my trade somewhere in here. Okay, let's assume it was somewhere here. I placed my trade somewhere here. Okay, I bought from here. Now, when I buy from here, the market trades forward. So it traded, it went all the way this area, traded back down close to this where I entered my trade, and then it reversed up, trades down interim, and then comes down all the way this area, goes up again, and then it comes down. Now take note, in as much as I place my trade here and I see the market go up and then it comes down, the market coming down doesn't mean that it is going the opposite direction or it is going to take me out of the market. It is going to trade below where I place my trade. The market is always forming swings. That is a high and a low, the high and the low, the high and the low. Even in a bullish market, even in a market where we are buying, or we have a scenario where the market is, we are looking at market buying, okay, we still have swings. The market goes up and comes down. It goes up and comes down. It goes up and comes down. But the overall underlining point is that in as much as it is forming swing highs and swing lows, we are still pushing further up. And the highs and the lows that we just learned will be able to help us underpin what we call we are in a bullish structure or bearish structure. Now, let me show you how it goes. So for instance, if I am in a market such as this, Um, let me use this. Which tool should I use? I want to use one too. Which two? Which two? Okay, beautiful. Now, assuming we are in this market, the market trades from this point, and then it comes to this point, okay, and then it trades down to this point, and then it trades to this point, and then it breaks further down, and it comes to this point, and then it breaks further down, and then it comes to this point, or let's say almost close to this, and then it breaks further down. Now watch this. You could see this pattern that price has formed. Okay, this pattern that price has formed. This pattern that price has formed. Now you will be able to clearly tell me which one is a high and which one is a low by now, right? So we have one here. We have this here. We have this here. And then we have this. Now, the question I'll ask is simple. Where have I put my lines? Where can we find these lines? These blue lines that I have, these straight lines, where are they on the chart? Assuming this is a normal candle trading at a normal price chart, showing different candles inside this range, inside this swing, there are various candles. They are bullish, bearish, but they are all swing. So now where have I put my this one? I want answers on the in the chat box. Don't unmute and speak in the chat box. I want answers. Where can these where I've placed my lines? On the highs, buy side liquidity. Thank you. On the high, great. Where we have the buy side liquidity, awesome. More answers. I want more answers. If you have any opposing or a different opinion to what they are saying. Okay, this is where we have gotten to is the main thing, is the main information you need on how you can go about the market and how you can go about trading. So don't sway off, okay? If you are here, be alive. We have this, okay? We have this showing on the chart. And I'm asking all the lines that I have placed. These lines are on the swing highs. Beautifully, they are on the swing highs of this particular chart we have here. They are on the swing highs. Where we have our buy side liquidity, yes, as someone said, they are on the swing high. All I need you to know is that they are on the swing highs or they are on the highs. Okay. But then I want to ask another question. Good. I want to ask another question. What is the overall trend of this market? This high in whatever. Overall, do you think it is going down? Do you think it is selling? Do you believe that it is going down as it is selling or it is going up? What is your opinion? I want you to, if you are watching, pause and answer. Okay. The overall, do you think it is selling, it is going down, or it's going upwards? Look at the chart well. When you examine, it is going down, selling, bearish trend. Thank you. Overall, we are in a bearish trend. Now, if we are in a bearish trend, what gave you the clue that we are in a bearish trend? Because you could see that at the end of the day, irrespective of where it goes, you can still see the price or the market trading down. Now, this is one of the things to do to know that we are actually in a bearish trend. And it is as simple as this. When you are on the market, anytime we have a bearish trend, we have the market forming lower highs. you were able to tell me that these areas were highs, right? All these areas I put the blue lines were highs. Now, in a bearish market, we have the market forming lower highs. What does it mean? It means that, so for instance, we're trading from here, we came down all the way and we came high, we came to form this high. This is the first high we formed. And the market traded down and came to form the second high. So what it means is that high number one and high number two, which one is lower? I want answers. Pause and then give yourself an answer. High number one, this is high number one. We form this high first, and then we form this other high. Which one is lower? Second high, thank you. Good, number two. So what it means is that we have what we call lower high. So anytime we are in a bearish market, what we found is that all the highs that are formed prior to the previous high is lower than the subsequent one. So this one is much lower than the first one. The third one is much lower than the second one. The fourth one is much lower than the... So anytime we have this kind of scenario where we have the high, we have the market forming lower highs, what it means is that we are in a bearish market. So for instance, you remember in our previous session, I just put an indicator on the chart for you to see when price is trading, when the indicator is below the line, the retail market will buy. When the indicator is above the line, so the retail market may miss this point because sometimes we may be in a bearish market, showing clearly that the highs are, the market is forming lower highs, but the retail, because an indicator may cross at a certain point, which may not really be in line with this particular setup, they may end up buying when the market is selling. Okay, so anytime the market is selling, we have what we call market forming lower highs. So this one is lower. The current low that high is formed, which is lower than the previous high. So we have lower highs. Don't forget. So just use the adjective first, which is the lower, then use the description, the high. So lower high. Okay. Now let's watch this. We have the market forming this. The second confirmation for you to see whether we are in a bearish or a bullish, whatever. So now look at the red lines. What can you see? Now the red lines are pointing to where? The lows, right? This one, there is no need asking. It's pointing to the lows, to the low, to the low, to the low. Now, what do you see on the low as well? On the low, we have the current low, which is, this is low number one, and then low number two. Obviously, you can see that the current low which is formed and there is the current low which is formed as compared to the previous one, which one is more lower? Number two is more lower. So which means that now here we have what we call lower lows. So the lower which was formed before the prior one is lower than the first one. So lower number two or low number two is much lower than low number one. So we have what we call lower lows. And then another one, the third one here, which is another low. So it's a lower low. So in a bearish market that you're able to tell me that yes, we're selling, or in a selling market, we have the market forming lower lows and forming what? Lower highs, sorry. Okay, we have what the market is forming lower lows, and then it is also forming lower highs. So in a bearish market, you don't need any indicator. You don't need how do we call it, MACD. You don't need RSI indicators, anything for them to say is overbought, is oversold. You don't need any of those indicators on your chart. Anytime any of you send me screenshot and I see any of these on your chart, I will see that you are not as serious. You are not ready to learn. These are the common things on the market to show you that we are in a, you don't need any indicator to tell you the trend or the direction of the market. Just by virtue of understanding that the market is forming lower lows and it is forming lower highs, we are in a bearish market. So all your trade frame is looking for sales. You frame your trade by looking for sales. Now, I hope you all get it. If you don't get it, you can ask question, okay? Type your question in the chat box. Now, let's look at the opposites. Let's look at the inverse. we have a market moving from this point all the way to this point. It comes down all the way to this point. It goes up, comes down, up, down, and then up. And then we have this, and ultimately into the sky. Quickly, let me put my lines quickly. This one, you should be able to answer them without even having to. Which type of market are we buying? Which type of market do you see? Are we moving upwards or we are going downwards? Are we trending upwards or we are trending downwards? Quickly, you can pause and then answer this for yourself. Which type of market are you seeing? Are we trending downwards or we are trending upwards? Bullish trend. Thank you. Upward. Thank you. We are in a bullish trend. It's a bullish market. We are in a bullish trend. So it means that market is buying. We are in a buy trend. Thank you. However, it makes understanding easier for you. Okay, so we are buying. Now, what type of lows are being formed? You don't need any indicator to tell you that the kind of market structure is a bullish market. So you should seek for only buying opportunities. That is when market begins to form what? Market begins to form what? So wait, this is a low. This is the low number one that was formed. This is the second low that was formed. Now, I want to ask you, so type your answer. What type of low is this number two? So is it a lower which is more lower than this or is higher than this? So what type of low is formed in a bullish market? Based on the previous scenario, this should give you a clue to even answer. So I'm waiting for answers. You can pause and answer that. So use the adjective first. So the adjective is if we are going up, it is an upward. So if it is an adjective, so it's a higher, and whatever you want to add. If it is a low, what type of point is that? Is a lower point. So is it a higher low? So don't bring the low higher or something. Okay. So it's a higher low. These are lows. These are lows. The lows are always found at the bottom. Okay. These are lows. But then the low that is formed after the previous one is always higher. So we have what we call higher lows. We have what we call higher lows. As easy and as simple as that. I hope that makes sense. These are higher lows. So in a bullish market, the opposite is true. So we have lows that are formed that are more higher. It means that when you look at the market, indicators shouldn't cross for you to know that we are in a bullish market. Immediately the market is forming lows. The low that is formed here, the next one that is formed is more higher, is upward. It doesn't come down and close below this. Then the other one is more higher. Then the other one is more higher. The same applies to when you have these type of so now tell me, what are you seeing where I'm putting the lines? What type of, I know that you know that this one is a high. So what type of highs is formed when we are having a bullish market? This should be something that is going to be very easy for you to answer. What type of highs? What type of highs are formed in here? I want answers. As easy as that, higher highs. So in a bullish market, anytime you go to your chart, just go to your chart and look at the chart and look for higher highs. When the market is forming higher highs, obviously we are in a bullish market. Beautifully, we are in a bullish market. So now, in a simple bullish market where it's forming higher highs, I'll show you when to buy and when to sell. You should know it by now. Or, okay, now let me show you. Let's go a little bit detail into when to buy in a bullish market. So for instance, I didn't show you when we're on the bearish markets. So for instance, let's not even do it here. We'll go to the chart and then do it there. We'll go to the chart. Let me erase information on this chart first and foremost before we go there. All right. So now, what we just did, okay, I'm coming to the chart, and then I'm going to show you that they are here. It is not that maybe we are just singing stories. They are just on the chart. So for instance, I'm going to demarcate an area, and then I'm going to ask you to show me what really happens inside that area. Okay, beautifully. Show me what happened inside that area. So now, watch this. Have you seen the shaded area? I hope you can all see the shaded area in purple. Okay. Now watch this. We have this here. We have this here. We have this here. We have this here. And then we have this here as well. These are in the shaded areas. Okay. Now I want you to tell me, which areas have I indicated on the chart? Which areas? These are the highs, right? These are the highs, right? And what type of highs have been formed here? What type of highs are these? What type of highs are these? On which time frame should one start knowing that the market has turned to bullish trend or bearish trend? No, let's not go to time frame. Stay with me, okay? Stay with me. Don't jump into time frame now. Your understanding should be the core, not the time frame for now. Okay, good. We'll get there. Okay, we'll get there. So I want you to tell me, good. So if the market is forming lower highs, now, per your understanding of what lower highs are, what what type of market structure is this? What type of market structure is this? So what type of market is this? Are we in a, there are two, as beautiful as that, we are in a bearish market. You see, your eyes are beginning to open to see, in as much as we have markets forming lower highs, obviously you know that we are in a bearish market. Now let's pick the lows from the bottom. Okay, so we have one here. Now some of you will begin to ask questions. We have another one in here. We have another one in here. So I have indicated three of them. These are lows, right? And what type of lows are these? What type of lows are these? Lower lows. So obviously you now understand that anytime we have a market forming such things, we know that we are in a bearish market. Now, lower lows, beautiful. Now, where, in as much as we are in a bearish market, it means that we have to seek for selling opportunities, right? Good. We have to look for selling opportunities. Now, where do you sell when you are on a bearish market? Where do you sell? So usually in a bearish market, we sell on the highs. We sell on the highs. So for instance, what type of high do we form? We have lower highs. So we sell on the highs. As beautiful as that. So where the market forms the high, this is where we enter our trades. We enter our trades on the highs. We enter our trades on the highs. As beautiful as that. So we enter our trades on the highs. This is where we take our sell orders. Okay. As easy as that. The same applies to, let me shade another area. So look at this other shaded region. So look at this other shaded region. What type of lows are formed here? I'm just indicating just two of them. This. Okay, so let me try and get rid of this so that makes the chart clear for you. Oh, sorry. All right. So now watch this. You have this, you have this. What type of lows are these? What type of lows are these? What type of lows are these? And we have this. What type of lows are these? As easy as that, you should know. Higher lows. And what type of high is formed? We have two highs that you can clearly see in here. We have one in here. And then we have one forming in here. And then probably there's another one in here. So we have higher highs formed. Obviously, it should tell you that we are in a bullish market. And in a bullish market, what are we seeking for? We are seeking to buy. So where do we place our buy orders? Our buy orders are always at the lows. Now, it is very opaque for me to say that our buy orders are at the lows. It is very too opaque or too open for you to say that. Oh, then every high, every low we see, we are just buying. No, there are always prerequisites for you to not just see lows and buy. Okay. So one of the main criterion that I'll give you, for those of you who opened an account, we are going to actually begin to use our demo account that we opened, okay, to begin to engage the market in a certain way. Now, let me give you a clear-cut rule to using these highs and lows, especially when you see that we are in a bullish market, okay, or in a bearish market. So I'm saying that when we are in a bullish market, you buy from the low, okay. Now, which type of low do you buy from? In order for you to minimize your losses, okay, or in order for you to have smaller stop losses, the lows that are formed that are very close to the previous low is the one that your eye should always be geared towards seeing, or your eye should be geared towards. For instance, we had this market, assuming we have this market already trading from a certain low and it goes to this point. Or let's use even the sell. Okay, let's use the sell scenario here so that it becomes more clearer, because it has a lot of high and then so we are seeking for more sell orders in this type of market structure, right? Good. Now my question was, where do we sell? And I'm saying that let's sell. You should always sell at a point which is more closer to the previous high. If it is low, we are buying at a point where it is closer to the previous low. Why? So that if you have to place your stop loss is always above the previous high. Okay. As easy as that. Your stop loss is always above the previous high. So what is stop loss that you're talking about? We've never even heard of it before. This is the first time I'm mentioning stop loss. Okay, so stop loss is actually a way to prevent your trade from, or your account from being wiped, in the sense that on the market, anytime you place a buy or a sell order, in as much as the price or the market is going your direction, all that accumulates or adds to your balance is the profit you are making. But should the market go opposite and doesn't go your way, all that is accumulate is losses. So I'll do a screenshot of that, a typical screenshot on my phone, and send it to your group for you to see when you open a trade, how does the market move? Does it automatically give you profit, or it gives you losses? And how does it work? So I'll open a trade for you to see. Okay, not today. So take note of what I just said about stop losses. So with this type of market structure where we have the bearish market. I'm saying that we are selling on the highs. But choose a high. For instance, if I'm going to open a trade here on this second high here, I have to make sure that, okay, it is close enough to this in such a way that the kind of losses that will be accumulated if I put my stop loss above here from this point to this point is not too wide, and the margin of losses that I will make if I should price doesn't go my way, if I make losses, it will be smaller than, for instance, assuming a typical example is this buy order here. So assuming I'm buying from this, I've seen the market has risen all the way to this point, and I've seen this low and I want to buy. Look at where can I place my stop loss. My stop loss can be placed either below this low, which is very far from where I'm buying, which will make my trade more risky. Okay, I'm buying here, I'm looking to take in profit maybe here. Small profit, I'm taking this huge risk. Okay, so we buy and sell at points. If we are selling at point which is closer to the previous high, where we can place our stop loss there. Because in a selling market is making lower highs. So we don't expect the previous high to be taken. In our next lesson, I'll show you what happens when the previous high is taken, or when, for instance, we are expecting the market to have lower highs. What happens if now we have another high which is formed above the recent high? Then what happens? How do we call that? Okay, so that is it for today, and then I think we'll leave it for here. We'll leave it here, and then we'll continue tomorrow. As we'll continue from where we got to tomorrow. I'm going to give an assignment. I'm going to paste it on the page. So I'm expecting all of you to go to the page and then get your assignment and do it and submit it. Okay. If you really want to become serious with it, be taking the assignments too seriously. Or if you don't understand anything, you can contact me and then we'll see how best we'll go about it. So until then, I wish you